All right, thanks for tuning in. Let's talk. Welcome to the fifth episode. I'm your host, Elena Lau, real estate broker and CEO of Union Real Estate. So today for agenda, what I'm gonna provide to you is an update of the greater Boston housing market. And then today we have Michael Chase with NorthMarq. Welcome, Michael. And I thought that would be good to know what's going on in the commercial real estate, more specific on the financing side. So he will be providing us with that kind of update. So let's dive in right into the housing market for the greater Boston area. So what I wanted to share with you is that since this past Monday, we started with the phase 2 of reopening plan in Massachusetts. What we are seeing happening is a more demand for housing. And as you can see on this chart for number of sale pending for the single family, you can see that week by week, we are seeing an increase of houses going under agreement. Same as the condominium market. So from what you can see in the single family market, there has been an increase of 11% week over week. And then for the condominium, we're seeing a 32% increase week over week. So the pent-up demand is lifting up May and June sales, which is fueling the real estate market and then therefore influencing the US economy. So in terms of pricing, what you are seeing is that it's keeping pretty stable. In average, we're seeing less than 1% in fluctuation in pricing throughout week by week since the stay-at-home order happened. Likewise, it happens in the condominium market. So for the single family market, there were 186 homes sold, which is about 27% year over year. And it's taking about 47 days to be sold, which is an increase of about 4% from last year, and an average sale price of $129,000. Like I said, the pricing has been in average of less than 1%. For the condominium market, we're seeing something different. There are 139 homes sold, which is a decrease of 50% from last year, with an average stay on the market of 33 days, which is a change of 18% from last year, and an average sale price of $762,000, a decrease of 21%. So that is what I got for the housing market. And then now I would like Michael to join us in the conversation. As a way of introduce Michael. Michael is the managing director at NorthMarq, and he has a vast number of experience in the commercial lending, more specifically, more than 20 years. And he has been involved in the origination of over $2 billion in debt and equity capital for commercial real estate assets. And he has named to the President Council as one of the top performing producers for NorthMarq. This is just a little synopsis of what he has accomplished thus far. Welcome, Michael.
Good morning, Elena. Thank you for having me, and also letting me be part of this conversation this morning. First off, let me say thank you for all the work that you do in support of the AAPI community with ARIA and the real estate community overall. I know we don't have too much time, so I will try to provide a quick synopsis of what's taken place in the commercial capital markets over the past 12 weeks, and then focus on where we are today. Please feel free to stop me at any time if you have any questions. Sure. And I see you already have my chart up, so thank you. No, this is not an EKG, but it does do a good job of illustrating the health of the commercial capital markets. The bottom line on this chart is the yield for the 10-year US Treasury. And the other two lines above show the average yields on AA corporate bonds and BBB corporate bonds. Why is this of interest? Well, for many lenders, corporate bonds are the most common alternative investment to commercial mortgages. What happens in the corporate bond market directly influences what rates lenders are able to offer on their commercial loans. As you can see, for much of the early part of the year, Yields were correlated, relatively stable, and low, so it was a great time to be a borrower. Then, of course, COVID-19 happened. Your listeners here may recall that March 10th was the day that Governor Baker gave the order shutting down all non-essential businesses in Massachusetts, and similar orders were taking place all over the country and, in fact, globally. So the point of this chart is you see that there was that period of extreme market volatility. But then the Fed ultimately stepped in, helped calm the bond markets, and began aggressively buying securities. And this action, along with other stimulus packages, has resulted in a steady drop in those corporate bond yields and leads us to where we are today. The market for commercial mortgages is certainly in a better place today than it was several weeks ago, and it continues to improve for borrowers. It seems each day more lenders are returning to the market. If we have the time, I can give you a quick rundown of each lender group.
Sure. Why don't we do that? And then I had a couple questions for you.
All right, great. Thankfully, first of all, we have a lot of banks in Massachusetts, and they continue to be in the market. As we all know, over the past several weeks, most banks were all hands on deck working on filling SBA PPP loan requests.
Right.
In addition to that, most people may not be aware that banks have to initially fund those PPP loans from their own capital until they get reimbursed later on from the government. And we're not sure when that will happen. So of course, this means there could be less capital for commercial loans at some banks. However, if you ask most bankers, they'll say they're in the market, but there's certainly a focus on serving their existing clients or perhaps targeting specific sponsors. The idea is working with known credit risks. Banks are very focused on financial strength, and the idea is they'll also be looking very heavily for liquidity to show there's an ability to carry through any rough patches which still may be ahead. If you want to get a bank's attention, it may be helpful to offer deposits and other banking business in addition to your commercial loan requests. Agency lenders, and this includes Fannie Mae, Freddie Mac, and FHA, have been very active in providing liquidity to the multifamily space. Agency lenders have been benefiting from having the support of the Fed, who is actively buying their mortgage securities. Fannie and Freddie are currently quoting rates starting in the mid-twos for conservative loans and in the low to mid-threes for full leverage.
Okay. How is the current rate right now for commercial lending?
So there's certainly bifurcation in the market depending upon size and quality. But for the best deals, as I mentioned, there are deals being done right now, low leverage, 5 to 10 year term, fixed rate term in the high twos, 2.85%, 2.9%. And in general, you're going to see rates in the mid threes. So we're back to the type of rates that were available at the beginning of the year.
Okay. Well, those rates are really attractive. And then what type of capital is available right now for commercial real estate?
Sure. So again, you've got Fannie, Freddie, and FHA providing liquidity to the for the multifamily market. You've got banks doing multifamily as well as general commercial, and you've got life companies providing long-term, non-recourse fixed rate debt. In general, there's a big lender preference for multifamily and industrial.
Okay.
They'll look at other property types, grocery anchored retail, credit retail, office, self-storage. They'll look at them, but there's going to be a lot of scrutiny on the in-place rents, and they're going to want to look at to know, have any of the existing tenants been provided rent relief or asked for rent relief? And they're going to be looking heavily at any near-term rollover for disruptions in upcoming cash flow.
Okay.
They're going to want to see, again, sponsor financial strength is going to be very, very important and key because, again, they want to make sure that a sponsor is able to carry, not only the loan, but they're not going to have stresses elsewhere within their portfolio that could impact their ability to pay.
Right. So liquidity is very important at this point.
It is. Certainly.
So what type of relief options are available right now, especially when we're still navigating the pandemic?
Sure. Great question. I would say that the volume of relief options certainly hit lenders' desks, particularly in April. Started in earnest in April. March was very early on. April's when it started, and it's pretty much tapered off through May and June. For the most part, on the multifamily side, we've seen strong collections data come in. And right now, for multifamily properties, the real next hurdles are going to be August. What we have is you have the enhanced unemployment benefit from the government, which is part of the CARES Act, that's adding $600 extra per week into the unemployment checks. And that's helped a lot of renters pay their rentals. And that expires at the end of July. So then we're really looking towards that kind of August rent payment to see where we stand from there. Also, locally here in Boston, we're such a heavily student housing market. We're gonna, and as we all know, multifamily in Boston, the majority of those units roll at the end of August on September 1. So those are two kind of stress points that we're looking at going forward for multifamily. In terms of other commercial, I think the volume of forbearance requests has, certainly reduced as of late. Banks were able to be very flexible for their borrowers, offering 3 to 6 months of flexibility right out the gate. Many times they started off with 3 months, so they still have a little bit of dry powder remaining for borrowers if the reopening gets a little bit more prolonged and they need those extra months, they may be able to go back to banks. Life companies have been by far more on a case-by-case basis, but in general, their loans are more conservative in general. So they've been able, most of those borrowers have been able to kind of withstand and not have to ask for too much. The agency lenders were very aggressive. They came out offering forbearance, but of course that also came with the added hook that landlords agreed not to do any evictions during the time of the forbearance period. So relief has been available out there. For the most part, it's been deferment, and and the lenders have been overall very responsive.
Okay. Well, this is really good data. So we are almost up on time. So let's check on what is going on Facebook if there's any other further question. So
all right, great.
Go check. So
Elena, while you're checking, one other thought I'd like to just share with your viewers is don't forget the upcoming tax filing deadline is now July 15th, which is just over a month away.
Right.
There are several tax benefits for real estate owners that were part of the CARES Act, some of which can be carried back retroactively as far as 5 years. So I know PPP loans have been a very popular way for people to get liquidity, but they may be able to get further tax reimbursements if they go back and refile old tax years or take care of their upcoming tax filing.
All right.
This is another thing to keep in mind.
Thank you, Michael. So it looks like that you have done a great job because our Facebook audience has been saying that it's such a great information. I had a couple more questions for you. Since we're going through this pandemic, have you seen any further challenges in the closing process?
Sure. I would say that we've been very lucky in that our office, and myself in particular, we've been able to close deals throughout this entire challenging period. We closed deals that were signed up before the crisis really took hold. We were able to sign up and close deals during the crisis, and we're still in closing now. Have there been challenges? Certainly. The ability to access properties for site inspections, we were able to navigate those by going into virtual inspections in many cases. The closure of public buildings such as registries created some challenges, but we were able to get over that with, say, gap insurance title coverage. So I think we've been able to meet and address any of the challenges that have come up and be able to get our deals closed. Okay,
so that's a good news.
Yep.
So actually there are a couple more questions that came in on Facebook. This is from Martin, and he's asking if you do SBA loans.
So we don't directly do SBA loans at NorthMarq. We can help broker those loans to other SBA lenders.
Okay.
Uh, our specialty is as a direct lender for Fannie, Freddie, FHA for multifamily properties. We're a direct correspondent for over 50 life insurance companies, and we do work. We have ongoing relationships with a number of banks. Personally, SBA is not a true specialty of mine, but if you have an SBA loan request, I'm more than happy to introduce you to an SBA lending expert, either at a local bank or a national SBA lending provider.
All right, thank you. So the other question is, do you do commercial lending nationwide and internationally?
We do nationwide. NorthMarq is the largest privately owned commercial capital intermediary in the country. We're headquartered in Minneapolis. As Elena was nice enough to mention, I'm the managing director of our Boston office. We have many clients who we follow nationally who have portfolios of real estate all over the country, and we're able to help them nationally. Internationally, we are able to help clients there as well. Mostly when we're working with international clients, it's with an international borrower and a domestic property. There are more limited cases where we may look at a property that's in another market, but I would say in general, that's not a true value added proposition for myself. I don't have boots on the ground in some of those other markets, so I don't know them as well. We can help, but they may be better served with working with a more local player.
Thank you, Michael. So the other question that he has is,
Sure.
how do you see the future of commercial lending after COVID-19?
I think the future of commercial lending is actually pretty good. As I mentioned, right now, we're in a much better spot than we were several weeks ago. The market continues to improve. In the near term, in terms of rates, I think borrowers can expect to see low rates. A 3.5% interest rate today is over a 250 basis point spread over the current 10-year treasury, which is below 1%. What this means is there's a lot of room for that treasury to rise and spreads to compress, but the overall mortgage rates to stay in this low to mid threes neighborhood. So I think for borrowers, commercial real estate capital will still be attractive and at attractive rates for them to borrow at. And commercial mortgages still remain an attractive investment class for lenders. So I think the commercial mortgage market is going to remain healthy and able to support owners and investors of investment real estate.
All right, well, that's a good news. So do you also work with commercial lending brokers?
With other brokers, absolutely. As a direct lender for Fannie, Freddie, FHA, we do work with other brokers who aren't direct lenders for those platforms. And also as being a correspondent lender for life companies, for other brokers who may not have those representations, we do work with them. We do pay referral fees, and we're also able to work on a co-broking basis.
Okay, thank you. So for the type of property, in commercial, there's a wide variety of asset class. Do you work with every single different ones, or it's just mainly multifamily or whatnot?
Sure. Thank you. That's another great question, Elena. So in general, I consider myself a generalist. So that is any income producing real estate. So that includes office, industrial, retail, multifamily, hospitality, self-storage, any income producing real estate. Today, of course, there are challenges for different asset classes. For example, hospitality is a very difficult asset class to find capital for today.
Of course.
Non-essential retail, where they've had, several closures, and those tenants are struggling. Certainly finding a little bit more difficulty attracting capital for that asset class today. But yes, we do work with all different types of income producing properties.
Okay. A lot of great information, Michael. So with that, I want to put it out there that I'm sure that you're available for any question for our audience and then service that. So I really want to thank you for your time today.
Thank you, Elena, for having me. I really appreciate the opportunity to speak with you and your audience. and happy to help anybody who has any questions on commercial real estate capital markets. Please feel free to reach out to me.
Thank you so much. So I'm
Thank
your
you.
host. If you have any further questions, you can feel free to contact me. My contact information is down below. So for our next Let's Talk, we're gonna have Chris Shane, a financial consultant, who will be speaking with us about the importance of timing into building your financial plan. So with that, we are closing today's session. Thank you so much, everybody.